Welcome back. It's Monday. Today I want to do something a little different. I want to jump into ULTY, of course, one of the yield max non-single stock ETFs, which generally speaking, I've only covered the single stock ETFs. Try to dive into the details as far as what these funds hold, how they performed over time. ULTY, of course, is a kind of a monster. It's, as you can see here, this spreadsheet is pulled from the yield max website. It's a $3.33 billion fund. So the fund is a bit smaller than Misty, but is a relatively large fund for yield max overall. How this fund is structured, I guess I tried to break it down here, but if you go to the yield max website here, you can see the description of the fund is to basically, or what do they even call it? They call it like the yield max ultra option income strategy ETF. Generate weekly income, so it pays weekly from a portfolio of covered call strategies on US listed securities. And distributions, of course, for monthly have such gone down to weekly. Overall, you can see here, covered call strategy provides direct or indirect exposure. So this is something that's different than the single stock ETFs. It provides direct exposure as well as indirect, but mostly direct exposure to the share price of the underlying securities. So rather than doing a synthetic, it actually does buy shares in the underlying securities, And I say they typically select between 15 and 30 underlying securities, with a focus on implied volatility levels, and regularly review the portfolio to basically add new entries, take new ones out, or add new ones, take old ones out, based on implied volatility metrics as they go up and down. Due to the exposure, the share price is just the returns on the share price is capped because of some of the call options. However, if the securities go down, you are exposed to the decrease in value. So all this is pretty standard. Just looking at some of how they describe the fund. But basically where the spreadsheet I got is basically from the holdings. You can download all holdings as such. You get this fund here. So overall, it's quite a monster of a spreadsheet, but basically what they're doing, and as I've noted before in the net asset column, they're 3.3 billion. So as of 10/6, it looks like everywhere in green is where they're actually buying shares. So they got all these stocks that, for people who follow the markets, these are very high exposure, or not high exposure, but high implied volatility underlying equities. A lot of them tied to a firm. You got buy now, pay later. You got bullish crypto. You got Coinbase crypto, CoreWeave AI, Figma. I mean, that one just went public. Pretty volatile stock. Hims and Hers, Robinhood, of course, one of the most volatile. I believe that's Lucid Motors. Of course, MicroStrategy, Open Door, Pony AI, Qubit. So not only do you got AI and crypto, but then you got quantum computing. Throw that in there as well. The Quantum, Rocket Lab, SoundHound, another AI play, NewScale Power to go feed the AI play. So of course you got some of the most volatile names you can think of all wrapped up into one ETF. Why get the most volatile? Of course, it is built on the thought of implied volatility. The higher the implied volatility, the greater option premiums you get for selling calls. So basically what this fund does, we go to the top and just take a firm, for example. They own, let me just make that easier to read. They own 750,000 shares, which if you divide that by 100, gives them 7,500 contract collateral for selling calls. So you can see here what they did is they take that and then they sell a call at 80, take in the option premium equity. The market value of that right now is negative 532,500 on the fund. However, that's the amount of money they took in. If that call goes to zero, or if a firm does not hit 80, that call will go to zero, and you basically get to keep what you take in from the option premium. So this is their primary strategy, is they buy the stock, they use that as collateral to sell options against. What they are also doing, a secondary strategy that it seems like they're doing on all of these items that they own, maybe I'll put this in like a yellow. They are selling a put and they're buying a put, same number of contracts. They're buying a put at a higher strike price and then selling one at a lower strike price. The main purpose of this is to provide downside protection from 71 to 66. So if there is a decline below 71 to 66, you lose on the shares you own, but your put that you bought here will gain in value 1-to-1 until you hit that 66 price. Then you'll be on the hook for all losses below $66 a share. So basically what they're doing is they buy the shares, they sell a call option at a higher strike price to take in premium, but then they use some of that premium also. So you don't take in all the premium, you use some of it to buy some downside protection as well. But you don't buy unlimited downside protection, you cap it. So in this case, you cap it at about $5 a share. of downside protection below $71 a share. And as you can see, that's what they're doing on all these. You can see bullish here. They got a call sold at 69, but then they got, or in this case, they have two calls. They have calls sold at different strike prices. They have calls sold at 69 and 70. But in this case, they do got the full downside protection of put at 60.5. Bitmine, this one again, they're selling call options 59 to 61. And you can see here, if you add these together, you get negative 9,780. And yeah, I guess it's not a one-to-one relationship. Pull that out. But in general, they're selling just about as many calls as they can. And you see here, negative 2,000 plus negative 2,525 is negative 4,525. 4,525, divide that by 100. Basically, for Coinbase, for example, they're using all their shares as collateral to sell call options against. But then once again, they're buying put options on the downside to hedge themselves a little bit on the downside. But usually on the downside, for the most part, at least what I've seen, is they've been not buying just single put options, but they buy a put spread, put debit spread, where they pay for a downside protection for a certain band of prices. So in this case, it's 335 to 315. But yeah, that's the spreadsheet. You can see it's pretty complicated, or I don't know if complicated is the word. It's pretty complex with all the different stocks and stuff going on. And then I wanted to point out too, in yellow here, they also got another strategy where they don't actually own the shares, but rather what they seem to be doing is they seem to be selling a put at 39 and buying a put at 37.50. So the opposite of what they're doing on some of the stocks they own, where they would buy a put at a higher strike price. In this case, they are buying the put at the lower strike price and then selling the put at the higher strike price. So this is a way to take an option premium if the stock stays above the put you sell. But in case the stock does fall, you only give yourself kind of a band of risk. In this case, it looks like $1.50. I do that for a few of these: Centene, Galaxy, Lululemon. I've tried to highlight in orange, Palo Alto Networks. So a few places, at least, that I just skimmed overall, but most of the times it's them owning the underlying equity, selling calls against it, and then buying put options to the downside. So basically, I try to take that data, and this episode is called All About ULTY, so I try to throw that into my spreadsheet here. But first, I just want to jump into ULTY, how it's been performing. Overall, if you look at just the compare, it's been a very popular fund as of late. I think the reason this is because if you look at it, this assumes a $2,000 initial investment back when the fund was started. Basically, I am zooming in on since kind of the late March, April timeframe when the stock market dipped. You can see a $2,000 investment with reinvested dividends went down to $1,634, so down $370 or so, assuming a $2,000 starting investment. But you can see since then, or since 4/17/2025 with reinvested dividends, your investment has grown from $1,634 all the way up to $2,338. So a pretty solid return in, 6 months or something? You went from 1634 up to 2338. And even with non-reinvested dividends, you took a 1778 portfolio up to just about 2000. So a pretty good return in the last 6 months or so. I think that's the reason for the interest in ULTY. I'm not entirely sure. All of a sudden, the fund kind of blew up in terms of popularity. But I think that's the reason. But if you look at it overall, you can see originally this fund came out at 20 and they were paying a monthly dividend, like the single stock ETFs that YieldMax offers. Then all of a sudden, in that March timeframe, they did, I suppose it could also correspond with kind of the March-April timeframe, or I guess early March. They did go to a weekly dividend, so maybe more people are interested in the weekly options, and that drove some interest. But overall, the fund, I mean, if you look at it, the actual ETF price of ULTY really got slammed initially. It was initiated in the February-March timeframe of 2024 at $20 a share, and then by March of 2025, it was all the way down to $6. So like in a year, the ETF value went from 20 down to $6.50. That said, it did pay out like a $11.79 or almost $12 dividend. So total return metrics, if you would have started off with 20, you can see overall, you've been down on this investment since inception date. But clearly, since about the March-April timeframe, the fund kind of has been on an upward trajectory with the steady dividend payments and such. So that's kind of the performance of ULTY. Of course, since inception, it has not been a very good investment. But it all depends where your time frame is. Of course, if you would have bought in the April time frame, you're doing okay or quite well. But then again, you could have bought just about anything at that time frame and be doing quite well right now. So that said, Distributions per share, they've been very steady, like the 9 to 10 cent range for a very long time. I think they're trying to keep it at that metric for as long as they can, or at least that's what I've heard. And yeah, for share count reinvested, so you would have started with 100 shares, you'd be all the way up to 427 shares. But the main thing I guess I wanted to dive into, if you go to ULTY, that's the performance. If you really want to jump into kind of the complicated items, I guess I got this other chart. If you scroll down a little bit, this will be automatically updated on a daily basis, roughly. So every time ULTY changes the portfolio, this should update. But what I try to do is I try to break down what the portfolio holds in a more visually appealing manner. So what we got here is we got how many, or what the market value of the current stocks that they own are. So you can see here, if we count 3, 5, 7, 9, 10, 12, 14, 16, 18, 20, 22. So it looks like we got 22 stocks that we currently have positions in. The one of the top 5 are probably Rocket Lab, CoreWeave, Palantir, and Coinbase. So those are definitely your top 5. The ones the lowest are kind of like Figma, LCID. I think that's Lucid. Lucid Group, and Affirm, OpenAI, and Pony AI. But here's a look from most to least of what the actual stocks that are in the portfolio. Additionally, they got a cash position. So I'll probably look to track this on a time series basis going forward. But right now you can see their average net assets are with the market cap about $3.3 billion. They got $88.5 million in cash, and then they got $636 million in basically cash or government securities. Basically a cash-like asset that's generating a slight return. And then what I try to do here is, this is where it gets pretty complicated, is you can zoom in, and I try to break down what ULTY owns in a variety of different visualizations here. So if you focus on Affirm, and I already went over this, but first they got their shares, and I basically have that listed under stock shares divided by 100. So it's basically, if you see here, you got contracts at 7,500. What this is if you take the shares divided by 100, it gives you collateral to 7,500 contracts. So this basically shows the shares they have in the firm, this dark line. And additionally, it says strike here of 76.16. That's not necessarily the strike. What I did is, instead of strike, for these other ones for calls and puts, the strike corresponds to the actual strike. But for the stock, the strike corresponds to the most recent share price that I have. So you can look at the strike and get an idea what the share price of the underlying equity is trading for. So that shows the underlying equity. And then right here it shows, so if you got 7,500 contract collateral in the underlying equity, you can see here they sold calls, 80 strike at 7,500. So you see 1-to-1. But then over here you can also see the put spread that they actually bought, or the debit put spread, where they bought a put, 7,500 contracts at 71, and they sold a put, negative 7,500 contracts at 66. So on a single stock basis, hopefully that makes sense. I got them all over here. You can pick which one you want to look at. So there's a firm, kind of a little bit more zoomed in. If you want to pick with whatever the long or the most held one is, Rocket Lab. You can see here, stock trading at 17.13, or that's a recent price. Check it just to make sure. Looks like they're down a little bit today, but they were at 17.13. Looks like they're just under 17 at the moment. That's set on the calls. So in total, they have 80,000 contracts. You can see that 50,000 plus 30,000. They got calls sold, 80,000, basically as many as they bought or they have collateral to. But they have them sold at 20, 50, and 19. And then on the same basis, they got puts bought at 17 and 18 at the moment. So that's how the status of Rocket Lab looks. This was the best way I thought I could make it visually appealing as far as what they own. You can see the stocks that they have in scope. This, of course, will update as their portfolio updates automatically. But for each one of them, HIM's another one. They got 27.5, they got collateral in shares for 27,500 contracts, stock trading at about 53. And you can see they got calls sold. If you do the math that year, 10,000 plus 10,000 plus 7,500 is 27,500. So 1-to-1. And they got them sold at 60, 59, and 58. And they got puts bought at 52 and 50. So hopefully that makes sense. Once again, I'm trying to break this down in the manner I saw to be the most the most intuitive, I think I should say. But that's not the only thing. So that's status for contracts. I also thought it'd be interesting to do status based on market value. So in this case, I took out the stock because clearly if we have stock included, or maybe I will just focus on a firm once again. So if you have the stock basically what the market value of the stock is. Clearly, the market value of the stock is way more than the calls and puts are. But if you take that out, you get a good insight into the current market value of the calls and puts that they have. So yeah, overall, let me take a look at a different one. Just let's do bullish. So in this case, you have the calls, and you can see they're worth about the 69 ones negative 656,000, and the 71's negative 1.6 million. But the put they have bought's worth 1.9 million. So this shows the same thing as this. So if you look at bullish here, take out HIMS, look at bullish. You can see they got one put, or they got a put bought at one strike price of 60.5. If you go to this chart, this tells you the current market value of that. So it's negative, or it's 1.9 million. As you get close to the expiration date, of course, if the stock, an equity is not close to one of these strike prices, the value, of course, will zoom down to zero. But if the stock price passes or goes, or these contracts go in the money, their value will explode to the upside. But so this is the number of contracts, and to reiterate, this is the market value. This is the best way I thought of just showing every equity. If you want to select them all, of course, unselect cash and other in this FGXXX or the governmental securities. But this one, if you want to get them all in one view, based on the number of contracts, you can see like Affirms over here. You got a $71 strike. This would be the put that you bought, and then the calls that you have sold, and then the puts you have sold, or the calls you have sold, excuse me. But then the last few are probably the ones that are the most used to what I've been doing. And once again, I will focus on Affirm because that's the stock I've been focusing on. So what this does is it shows basically what's in this one, except it adds the strike price on the x-axis. So here's the strike price. What's in red here is where the shares are currently trading. So Affirm, $76.16. With blue here, you can see this little legend down here as well. These are the calls we have sold, 80. So you got 7,500 contracts sold at 80. And then in orange here is the puts. And you can see we got this put spread. We got the puts bought at 71 and the puts sold at 66. So yeah, you can do that for each one of these stocks. Let's take a look at Coinbase, for example. If we click into here, Coinbase, you can see that the Coinbase stock's been on a little bit of a run lately. 386.59 is a recent price I have for that. For calls, it looks like they sold calls at 365 as well as 380. So clearly the stock price has run beyond the calls. Whereas the puts, or the put spread that we bought, all the way down at 335 and 315. Or this one's not a spread, actually. This one is so if you take a look at the difference, we get Affirm in here as well. For Affirm, we had a spread where we bought at 71 and we sold at 66. But for Coinbase, we did no spread. We bought at 335, then we bought again at 315. So rather than selling, we just bought at an even lower strike price, probably limit the amount of equity or premium we have to spend up front because it's at a strike price. It's quite a ways away from the underlying equity price, but does offer some slight insurance. So there's a look at Coinbase. You can do this for any of the stocks. But then finally, and I think Coinbase would probably be a good one to review for this last tab, so for Coinbase, if we go to this here, you can see the equities at 386.59. This basically shows the exact same thing. This tab here shows the exact same thing as this tab, except for number of contracts. We got the actual market value. So since Coinbase is above the calls that we sold here, you can see that the negative value of these calls that we sold has gone quite high. You can see this one's negative 3.3 million, and this one's negative 4.375 million. Whereas these puts, since these offer downside protection, but the stock has gone quite a bit higher at 386, you can see the market value for these have shrunk dramatically. This one's going 125,000, and this one here is 368,000. So you can see these things, based on where the underlying equity price it goes, these things will move up and down accordingly to represent the market value. But anyway, I hope to follow this. I know ULTY is a popular fund. Looks to be doing better since April. The only negative I can think of it is I do think the expense ratio is a bit high. See if I can see if they list it. So their gross expense ratio is 1.4%, net expense ratio 1.3%. In my opinion, I guess I don't mind ULTY. I do like the weekly distribution. Looks to be doing good. I'm going to study kind of their strategy going forward. I got the automated approach on my website. But overall, yeah, the only thing I find negative is this expense ratio that does seem quite high. That said, the strategy they're employing, whether it's good or bad, I guess we will come to see with more time. But it is quite complicated with several different equities and several calls and blocks being sold. So I guess they need to justify their time in doing it, thereby charging that somewhat pricey expense ratio. But for those who are in the fund, I look to track its overall, how the fund's doing overall from a price perspective and total return perspective. And then for those who like to dive into the weeds, of course, I want to track what equities the fund is currently holding. And for those who really want to get into the weeds, we can take a look on the single stock. We can see where the stock is, what calls they have sold, and what puts they have bought. So if you want to track this, how the fund's doing on a stock by stock metric, hopefully this offers you a way to do it. But thanks.